So there is a version of you who always plans for everything. When you start investing or trading, the first thing you do is you set up the price to buy, the price to sell, and the day you want to buy or the day you want to sell. You plan all the things, and when the execution happens, it completely differs from your prediction. And that's not pretty unusual in markets. Most of the times your plans are going to fail because markets and men are not run on logic. They run on high dopamine, fear, greed, ego, or sometimes not even that. Sometimes it may be institutional investors algorithmically triggering some events. So if you're someone like me who likes to plan all the details or make a grand plan before making a strategy or before execution of a strategy, then let me give you the disappointing fact. You're going to fail. Your strategy is going to fail at every point. But the thing is not the strategy is going to fail. The thing is how you are going to react to those events. Some people feel disappointed. They feel that their strategy is wrong. They start doubting their own strategy. They think that they are the mistake. But that's not actually true. This is the name of the game. Making a grand plan and accepting or embracing the randomness of markets and men. Now let's take a step back and understand why this thing happens. And at the end, we'll see how you can get out of this or how I got out of this. So let's understand the game of randomness and how you should tackle it at every situation. So let's say you made a grand plan of investing in certain asset. You did all your research, you know that this is going to work out, and you tried to invest. The moment you invest, the asset starts falling. The first thing you do is question your strategy. Question all the research that you have done. You're basically putting all your efforts and throwing it into the garbage. That's the first thing we do. We doubt ourselves. We curse ourselves. The voice in our head is telling that you made some mistake. But that's actually not true. So what I do in this situation is just accept the randomness. The second thing is, like, instead of cursing yourself, why not laugh it out? Yeah, I made a mistake. Accept the fact that you made a mistake. Accepting is way better than regretting. And my third point is about regret. People say they don't regret it. But if you're bringing the same situation again and again, or the mindset of regret again and again, subconsciously, what it will do is not compound your wealth, you'll just compound your regrets through your lost causes. So throw the regret out of the window. Laugh it out, accept you have made a mistake, and move forward. But some of you may be saying that then, should I plan that far? Or should I make a grand plan or grand strategy? And my answer is, of course you should. But the strategy you make is not about the grand plan. You should have a broader vision of the strategy and try to implement the strategy one step at a time. The mistake what we do is we set up our goals so high, so far, that we get disconnected from it. We forget that there are 100 steps to a strategy and you have to plan at every step. But some of you maybe that is exhausting. Yeah, it's exhausting. If you don't want to do that, then accept the fact of randomness and just give up. Let me tell you a story of a very smart person. Sir Isaac Newton. You may have heard about his inventions. Do you know that in 1720 he invested in a stock called South Sea Company? At that time, South Sea Company was the hottest news of the town. So Isaac Newton went and bought a lot of stocks of this company. The stock went up, and then he felt that maybe this is the potential that the stock can reach, so he sold his stock at the highs. The next thing that happened after he sold was the market went double from that situation. All his friends, all his colleagues were earning more profit. So what he does is he jumps back into the market. Once he jumps into the market, the stock crashes to zero. There was some scam in the company. So even the smartest person at that time in the world was not able to predict the randomness of the market. And not even the randomness, he was not able to control his urges. If you think that financial markets is a game of smartness, it is not. Financial markets is the game of controlling your emotions. And the next point I'm going to discuss is how to control that emotions. The first thing I usually do is never get emotionally entangled with any decision I make when I invest. Even if I win in the market, I don't celebrate. Even if I lose in the market, I don't regret. And that's the way I go. I am completely unemotional in this situation. The second thing you can do is don't get high on your wins or lucky wins. There's a concept called spark paradox. When you make a big win in the market, the first thing that you get is a high dopamine effect, a high intense emotion that you feel from winning that bet. When you get this intense emotion, you try to chase this emotion. That's why you have to control your spark so that you don't fall into a paradox of thinking that you can make it again. The third point is the complete thesis of the video. When randomness hit you, don't react, try to solve the problem. The one who reacts first will be punished, and the person who can sit and plan for the next step is the one who will come out of that situation. See you later.